Hi everyone. For months now, almost all the news we've talked about here is related to the coronavirus pandemic. Restaurants closing, then reopening, and then closing again. But for the CRA, all the issues we were working on before the pandemic haven't gone away. One of those is something called the split roll property tax, also known as Proposition 15. You'll see it on your November ballot. It's a statewide initiative. It's a proposal to dramatically increase property taxes on businesses. It was in 1978 that California voters passed a landmark law, Prop 13, which still governs how property taxes are calculated. Prop 13 has capped property taxes for both business and residential property owners ever since. Under Prop 13, taxes on both types of properties are based on 1% of the purchase price, and annual increases in taxes are capped at 2% per year. Because it limits how much property taxes can rise, Prop 13 has provided certainty to both homeowners and businesses that they will be able to afford their property tax bills in the future. For decades, as a way to increase government revenue, special interest groups have tried to get an initiative on the ballot to change the way property taxes are calculated so that those taxes rise faster. They argue that property taxes should be based on the market value of a property and not its purchase price. This year, they finally achieved that goal. But they know they will lose if they include tax increases on homes, so they routinely target only business properties in hopes of convincing voters that such an initiative won't cost them. So Proposition 15 won't raise taxes on residential properties, but it will raise taxes on business properties, and it will do so at a time when businesses can least afford it. It will increase your taxes by requiring a reassessment at current market value at least every 3 years. This isn't a problem just for those of you who own your property. It's a problem for all of you who are renters in a commercial space, because your landlord will likely pass that tax burden on to you. So the CRA is opposed to this ballot initiative and is playing a leadership role in the campaign against it. And this isn't an easy undertaking. The public has plenty on their minds already, yet we have to help voters understand that even though this proposal won't touch their residential property tax, it will impact local businesses at a time when they've already been nearly wiped out by the coronavirus pandemic. It's early yet, but once you open your voter pamphlet later this year, you'll see the CRA's argument against it. It's from the CRA's president and CEO and says, quote, "Most small businesses rent the property on which they operate. Prop 15's higher property taxes will mean skyrocketing rents at a time we can least afford it." End quote. Our partners in the food economy say there will also be a negative impact on family farmers, resulting in higher costs for food. That's because the initiative will raise taxes on barns, dairies, processing plants, and fruit and nut orchards. The stakes are high in this ballot fight. On the other side of the fight are labor unions, trying to appeal to voters for funding for government services and schools. We'll update you on this as we get closer to Election Day. I'm Sabrina, and I'll see you here next week.